VOO is an ETF. ETF stands for Exchange Traded Fund. Think of an ETF like a basket of stocks. VOO's basket holds stocks from the S&P 500. The S&P 500 is a list of 500 big US companies. When you buy VOO, you buy a tiny piece of all those companies. It's like owning a small slice of the entire stock market. This makes VOO a simple way to invest in many companies at once. You can buy and sell VOO just like a regular stock. It trades on the stock market throughout the day. This is different from mutual funds, which are priced once a day. VOO offers a convenient and affordable way to participate in the growth potential of the US stock market. It's a popular choice for investors of all levels, from beginners to seasoned professionals. VOO aims to match the performance of the S&P 500 index. This index includes large, well-established companies across various industries. You'll find familiar names like Apple, Microsoft, and Amazon in the VOO portfolio. By tracking the S&P 500, VOO provides exposure to a broad cross-section of the US economy. This means that when the overall stock market goes up, VOO tends to go up as well. Of course, the opposite is also true. When the market declines, VOO's value may decrease. The performance of VOO is not guaranteed and will fluctuate. However, over the long term, the US stock market has historically trended upwards. This makes VOO a potentially suitable option for investors with a long-term investment horizon. Investing in VOO is a way to participate in the growth of leading American companies. It's important to remember that past performance is not indicative of future results. VOO is a popular choice for investors for several reasons. One key reason is its simplicity. It offers a straightforward way to invest in the entire S&P 500 with a single purchase. This eliminates the need to research and select individual stocks. Another reason for VOO's popularity is its historical performance. The S&P 500 has a long track record of delivering returns for investors. While past performance is not a guarantee of future results, VOO's performance has been generally in line with the S&P 500. VOO's low expense ratio also makes it attractive to investors. The expense ratio is the annual fee charged by the fund manager to cover operating costs. VOO has a very low expense ratio, meaning that investors get to keep more of their returns. Finally, VOO is highly liquid, meaning that it can be easily bought and sold on the stock market. This makes it a flexible investment option for investors who may need to access their funds quickly. Section 4. Benefits of VOO. Low costs and built-in diversification. One of the biggest advantages of VOO is its low expense ratio. The expense ratio represents the annual cost of owning the ETF. VOO's low expense ratio means you get to keep more of your investment returns, which is, well, a pretty big deal for long-term growth. Another key benefit is diversification. VOO holds stocks from 500 different companies across various sectors. This diversification helps to reduce risk. If one company or sector performs poorly, it's less likely to significantly impact the overall performance of VOO. For example, if you had invested only in technology stocks and that sector experienced a downturn, your portfolio would likely suffer. However, with VOO's diversified holdings, the impact would be spread across different sectors, potentially mitigating losses. VOO's diversification and low costs make it a powerful tool for investors seeking long-term growth. But do keep in mind, diversification does not eliminate the risk of loss. Section 5. VOO in your portfolio, a core holding for long-term growth. VOO can be a valuable addition to a well-diversified investment portfolio. But before jumping in, consider your investment goals, risk tolerance, and time horizon. Many investors use VOO as a core holding, meaning it makes up a significant portion of their portfolio. They may then complement VOO with other investments like bonds or international stocks to balance things out. For example, a younger investor with a long-time horizon might allocate a larger percentage of their portfolio to VOO, seeking growth potential. On the other hand, an older investor nearing retirement might prefer a more conservative approach, allocating less to VOO. Remember, investing always involves some level of risk, and there is no guarantee of returns. It's super important to consult with a financial advisor to determine the best investment strategy for your individual needs and circumstances.